Hey everyone, welcome back to Upside Down Data. Today I want to talk about Hedera-Hashgraph, some of the recent developments that have been happening with the network, and then consult some of our models that can give us another idea about where things might go with HBAR moving forward. So I want to start this conversation by starting with our dashboard on our website, polaritydigital.io, that we've launched in collaboration with Jay over at Daily Crypto Analysis. So this is a website that has a lot of useful tools, and the dashboard provides a lot of useful information. So this is the real-time, it basically provides real-time information from all of the different models that you've seen here on the channel. So our risk indicators, the upside downside potential indicators across the 3 different time frames that we monitor: short-term, medium-term, long-term. We also have our momentum bias indicator, momentum indicator, trend confidence indicator, and market direction classifier, which are trend models. And this dashboard just lets you see these real-time, the output of these models for HBAR and for a bunch of different crypto assets. But of course, I want to focus on HBAR today, so that's where we're going to start by talking. So we're going to come back and talk about this a bit more deeply. But one thing that I did just want to highlight quickly is how the short-term UDPI for HBAR has really cooled off from where it was just a week or two ago. It was quite elevated, well above zero. Now it's reset roughly back down to neutral, suggesting that in the short term, the model thinks that there's, it's reasonable to expect, there's the same amount of upside relative to downside potential for HBAR right now. So the question then is, which way will it go? Will it start realizing that upside, or will it realize more of the downside? So let's talk about factors that might give an idea of which way, things might be leaning. So from a more kind of fundamental perspective, or just developments that have been happening on the network, Dell was recently announced to join the Hedera Governing Council, which of course is good news, and the market took it that way. The price of HBAR pumped around 11% on the news that Dell was joining. And of course, Dell is a big company, a big computer manufacturing company. So this is a good thing. The more that companies kind of get involved with HBAR and kind of get an interest in it by joining the governing council, probably the better for the network. And of course, Dell is not the only large company to do this. You look at Hedera's governing council, a lot of big names, a lot of big tech companies, and big names from other sectors as well that have joined. Obviously, what you'd like to see is this to continue to expand, where you'd like to see, more and more large companies kind of put their stake in the ground, kind of plant their flag, and then, hopefully down the line develop or build use cases that are using Hedera on top of it. And of course, this is also a bit of old news by now, but just bears mentioning again that HBAR has started to see some actual usage by enterprises, some actual enterprise use cases that have really shot up the transactions per second. The transactions per second before this happened were quite low in terms of, the daily transactions and just the kind of constant TPS rate. It's now quite a bit higher, and it's been sustaining at these higher levels for quite a while now, for about a month or as I speak now. And so you'd like to see this continue. And the nice thing about this, and I made a video about this about a month ago, is that one of the advantages of this is that it creates a lot of fee revenue for the network. And the more transactions per second that end up happening on the main net, the larger and larger that fee revenue would be, which makes Hedera a more sustainable prospect down the line. If Hedera can get to a point where fees are generating enough revenue that drives demand for HBAR, independent of speculation and things like that, that would be a very bullish long-term kind of factor for HBAR. So we're still early days, we're still early. This is really largely just being driven by one use case, one enterprise use case currently, but it could certainly increase down the line. So that's, I think, something we want to keep pay attention to. Great first start. I'd like to see this continue. I'd like to see more big companies get interested. So let's now go back and talk a little bit more about what some of our models think about HBAR's price right now and where we might see it going forward. So some of those other factors are kind of more fundamental background, but they're not necessarily going to be driving short-term movements as much as technicals. They can provide impulses, but then other factors are going to matter as well in terms of whether or not those rallies can sustain and things like that. Our models can do a good job of giving us some additional insight into what is going on. Let's first just talk a little bit more about risk. So I'm showing you here the upside downside potential indicator short terms. This cares about moves that play out over days to weeks, so shorter term in its time preference or what it's concerned about. And I'm just showing the historical chart. So this teal line is the UDPI short across time. The white line here is the HBAR price. So you see the short-term UDPI really spiked up in this big rally, when we went from a little under 4 cents all the way up here to about 7.3 cents in this very short time, and then we kind of consolidated here. You see the short-term UDPI really got extended up to almost 2, 1.91 around about at the top there. But you can see that risk has been resetting. So after that kind of initial impulse, the model is thinking that a lot of the short-term upside potential had gotten realized here, but now it's basically building in the possibility of additional upside now being plausible, that now that things have kind of cooled off, kind of consolidated sideways for a while, that maybe now we have more room to move back to the upside again. And if you're a bull on HBAR, if you want to see this rally continue, that's the exact thing that you'd want to see on the short-term UDPI. What you wouldn't want to see is this just continuing to go off to the moon, suggesting that the downside is a lot more plausible than the upside. But we haven't seen that. We've seen this cooling off, which now might give room for another move to the upside. And so, HBAR has done this before. Other assets that you'll look at will show this behavior as well, where they can have this initial pump that really spikes things up on the short-term UDPI. You kind of cool off, and that gives room to move up for that second leg. So, if you're a bull, that's what you like to see. Now, obviously, a bear would look at this and say, oh, yeah, well, look at this. This just means that the risk is going to fall way lower, right? It's going to be kind of this local top. You're going to see risk come all the way down and price not really doing anything meaningful at the very best for a while. Possible, but we'll have to wait and see. And I think it's really going to hinge on what the broader market does. I think if broader markets remain bullish, I think HBAR could continue to move. Because HBAR does have a lot of kind of bullish narrative behind it right now. The fact that it is getting enterprise usage, and that a company like Dell joining, at least in the very short term, you could see. I think it's reasonable. I think you could see some continuation off of that. And the short-term UDPI is thinking that that is plausible, and I think it would not be surprising to see a continuation of the rally and for this to then roll over back up, and then maybe that's when we actually put in whatever the local high will be. So not financial advice. That's all obviously just speculation. But it is a realistic scenario from here, I think. I think that HBAR has more narrative behind it than a number of other L1s, so it's one that I think is particularly interesting to watch currently. Talk about another indicator. So this is our market direction classifier I mentioned earlier, the trend model. And this one is nice because it's very easy to interpret and to read. Basically what it does, the MDC, is it creates this critical level, which is this teal line here. And if price is above the critical level, that's bullish, and if it falls below it, then that is bearish. And you'll note that there are often these rallies, these huge rallies, you'll flip bullish, and then off to the races you go. Flip bullish, off to the races you go. Whereas conversely, when you kind of come off those periods and you start dipping down into the red, that can oftentimes be led by these really nasty bearish phases that fall out. Now, more recently, HBAR did flip green, and this was all the way back down when HBAR was at a price of about 4.8 cents, roundabout. It flipped green, and then off to the races we went, which is not uncommon with this indicator. And so basically with this model, it's saying, until we flip bearish on this level, and it's actually giving HBAR quite a bit of leeway right now, saying about 5 cents, a little over 5 cents, where it's currently watching before we get bearish again. Basically giving HBAR a lot of leeway. So even if we do see a short-term correction here, really unless we fall back below that level, the model's not going to be that concerned. It thinks that upside, is the side to be on. It's going to be disposed to the upside rather than the downside. But of course, if you lose that level, then the wheels could fall off. It's possible you could go down lower. So you always have to keep the downside in mind. But the nice thing about this model is it gives you a level to watch. So obviously, going back down to 5 cents would be a pretty big loss from anyone who would be buying up at 7 cents. But of course, to get that example, if you bought the all-time high, then you sold here, you're probably still happy to do that so that you didn't ride it all the way back down here. So one of the things that's useful to watch, one of those kind of interesting data points to keep an eye on of determining bias. Is a bias to the upside or downside more reasonable, or an outlook of the upside or downside more reasonable? This model thinks the upside is the reasonable way to look. Let's also talk about momentum. So this is our momentum bias indicator. It quantifies if momentum is really biased to the upside, price kind of pulling price to the upside with it, or if momentum is biased to the downside, leading to these kind of really nasty downward movements. Now, what we've seen more recently in this current rally is a really massive spike in momentum bias, where not only have we cleared above zero, which is kind of the neutral point, we've established a pretty positive momentum bias by now. Ones that we really only see in these really big kind of moves to the upside. And this is a big break. It's a big change from what we've been seeing the entirety of this bear market, where we're just spending all of our time more or less in the red, trying to reestablish positive momentum, getting rejected, coming down, setting in a new low, trying to reestablish positive momentum, getting rejected, setting in a new low, etc., etc., etc. We've now broken out of that paradigm. And this is important because this behavior that you're seeing right here is textbook bear market behavior. We saw it across assets. We've seen it in previous market cycles and assets that were around for those market cycles. We saw it showing up again. HBAR was showing it very textbook. And at the time, I kept pointing this and say, until further notice, this means that we're probably still in a bear market. That because we're seeing this behavior, this is bearish, this does not look good. Any kind of thoughts of us just going parabolic are not really in the cards. But the second we started seeing this, that suggests that maybe, and again, maybe, it's all speculation, nothing guaranteed, but maybe we're turning the page. That maybe the worst of the bear market is behind us, and now we might be entering into a zone that maybe would look a little bit more like this, where you start kind of oscillating around zero to build into some more bullish movement. And so this is what you see in other assets in these consolidation zones out of bear markets that then eventually lead into a bull market. You'll see this behavior on the MBI where you kind of start oscillating around zero. You go up for a bit, you come down, you maybe poke below zero for a bit, you come back up, you kind of oscillate around, kind of like this, and then off to the races you eventually go in the next bull market. So it doesn't mean that price can't fall, and it could just mean that price, kind of goes sideways for a while. So even if we do see some short-term movement here, maybe we just kind of largely don't really do anything that interesting for a while, but then that can eventually lead into this big parabolic move whenever the next bull market comes around. So it's still early, we're gonna have to wait and see, and obviously this is all predicated on us not having like a complete meltdown in the stock market or some other big disaster that just makes all risk assets crater, no matter what kind of fundamentals they have going behind them. But barring that, I think what we're seeing is certainly something different than what we saw all of 2022, which could be a very good sign for HBAR and frankly for the rest of the crypto market if we're starting to turn that page. So there's questions of very short term, what's going to happen with the rally. Then there's questions more medium term and long term. And this is one where I think kind of medium term, this is looking hopeful. And then if we see this continue to play out long term, I think it would also start to look a lot more favorable. So time is going to tell if all this plays out, but we're going to have to wait and see. But this is a good sign. This is a point for the bulls. Now, the final thing I wanted to mention here is this kind of indicator that I just threw together because I think it's just an interesting way of looking at the data on our workbench. So I didn't mention before, but one of the really powerful aspects of our workbench, which is what I've been using to show you all these different things, is that you can go in and you can make your own models. You can make your own metrics. You can basically just add in any of the models that we have for any asset. So in this case, we're obviously looking at HBAR. We can add in the long-term UDPI, the short-term UDPI, the trend confidence indicator, the market bias indicator, or momentum bias indicator. You can add whatever you want into the workbench, and then you can make these formulas, which is what I'm showing you here. And what I've done in this formula is I've just multiplied together all of those different metrics. So the long-term UDPI, short-term trend confidence indicator, momentum bias indicator. I've just multiplied them all together. So what does that do when you multiply those different indicators together? Well, the first thing that's important to know is that all of these indicators range from negative to positive, right? They'll have zero as their kind of midpoint, their neutral point. Anything below that will be negative, anything above is positive. And obviously, when you're multiplying different things together, if you're multiplying 4 positive things together, that'll be a positive number. But also, if you multiply 4 negative numbers together, that will be a positive number as well. And so what this metric is going to give us is a visual of when all of these different metrics are at extreme points in the same direction. So when is it that risk in the long term and short term, trend and momentum bias are extreme either to the upside or to the downside all at the same time? And when that happens, when you have extreme values all together at the same time, you'll get these spikes where you'll notice that you're kind of hanging out this neutral kind of level, but then at important points in the market, or generally speaking, points that are important in the market, extreme points will get marked by these massive spikes that we see right here. At the all-time bottom down here, we get the spike off of the usual. Over here to the top of this 21 run, or more or less the top, we get this massive spike. In the all-time high spike over here in September 21, this big spike. And then in these capitulations that we saw in May of 22, and then again in June of 22, we see these big spikes. And then a few more kind of smaller ones down back here in November. And then again in January was really the local bottom before this reversal to the upside. So what's useful about looking at this? Well, as I've mentioned before, this oftentimes marks important points in the moment, such as bottoms and at least local tops. Now you can look at this and say, well, it failed here, right? This wasn't the bottom. But what it did mark, I think, was kind of the beginning of the end. These big capitulation zones that even though price did kind of grind down from there, I think this general time between May and June was not only when the kind of the tone for HBAR turned around, but really the broader crypto market. I think this was the big capitulation that saw a lot of forced selling to happen, and then also just a lot of organic selling of people who just decided to get out, just dump out, capitulate. Whereas the November crash was a little bit more driven by like the FTX collapse, a lot of forced selling that was around that. But I think by then a lot of the people who were going to sell out of fear kind of had already done so. And you'll see in things like the momentum bias indicator that the downside momentum during the November crash was way lower than what we saw in the May and in the June crash. Look at how much lower the MBI is here, suggesting way more negative momentum bias over here than we had over here. And so I think this was that even though it would have been early, obviously, to call these the bottom, it did mark a point where the worst maybe was over. The worst of the downside momentum was ending here, and that eventually, at some point, even if price grinded down, we were going to probably see some mean reversion, some move back to the upside, which ultimately here ended up coming in January. And you can look at this type of metric for other, so for Bitcoin, you can look at this for Ethereum, and it tends to work quite well at identifying these kind of key moments in the asset. And so this is just another thing that I think is useful to kind of give us some context here, that really the worst of the bear market kind of happened through here. We had some short kind of grind down, but now we've really retraced pretty much all of that loss from this entire time going back into here, and there's a possibility that we keep even going up further. And so I think this is kind of marking the worst of the pain right here. And now, the stage might be set for us to be able to move back to the upside. So time will tell. A lot of this is dependent on broader markets remaining bullish, on broader crypto market remaining bullish. But if that happens, I think there's a reasonable case to be made, looking at some of our different models, that some additional upside in the shorter term is plausible, and that things are maybe turning around in the more medium to long term that are hopeful as well. And if Hedera can maintain this kind of pace of bullish news, of kind of adding organizations to the network, kind of getting additional use cases to start use it, that should, or could, I should say, generate continued kind of narrative hype, kind of more interest in HBAR, more interest to acquire it as an investment, which could then be positive for its price action. And then, of course, fundamentally, if more organizations start using Hedera, it just adds to its sustainability down the line and its profitability from fees. So obviously none of this is financial advice. You should look at this on your own, make your own determinations, your own opinions of where you think might go. But those are some of the things that I'm looking at and I'm thinking about right now. So to wrap up, I'd again suggest go take a look at our website, polaritydigital.io. I'll leave a link to it in the description. You can take a look at what's going on with HBAR and all these other different assets. You can look at the indicators across time and build your own different metrics for HBAR to keep an eye on, or to tell you novel insights about the market that we haven't talked about, or that people haven't even discovered yet. It's there for you to explore, totally free to access while we're in this kind of beta phase of the website. Then also go ahead and check us out on Twitter, put a lot of updates about indicators and more over there.